Hi, this is Zach here with a weekend edition of the Bulletin Board Heroes. It is Sunday, October the 13th, and after 25 years of doing this, it looks as though I've got some competition, so I'm going to be on my best behavior. Starting off with the FTSE 100, where you can see we've bounced for the fourth time on the floor of that rising trend channel there from this time last year, the level there around 8,200. Above that, looking for a long-awaited break, lasting break of that May resistance line there, 83.50 now, and then obviously to take us up to 8,700 maybe by the end of next month if the market manages to dodge the bullet of the budget. On the downside, looks as though after last week's dip below 8,200, 81.60 or 65 from last month will be the floor for this market, but if there is a rug pull, then the floor of the channel there from May around 8,000 and the 200-day moving average just above it could be a potential target. Looking closely, we want to see an end-of-day close above the 50-day line, 82.60, to really get us going. We've had basically the market hanging around just at or below that for the second half of the week. RSI still at 48, so at the wrong side of neutral 50, which would be potential momentum giver. Moving on to the DAX, and here, beautiful end to the week there with this U-shaped bull flag, as I call it, resting on the old resistance. So that suggests that we are heading up to the top of that rising trend channel, 20,200 there for the DAX one-year channel. And looking at that while we remain above 19,000, and certainly while the RSI remains on the right side of neutral 50, I suppose you could argue that we've bounced above that neutral 50 level more than 5 times in the last month. So that is a very strong setup indeed. Moving on to the Dow, which one would expect will just go higher and higher until the election to ensure that the incumbent wins. Here we've got the top of the channel there, 43,600, which is what we're looking for by the end of this month, and hopefully we'll get that while we're above the initial September resistance around 42,500. Obviously, like to see this market stay above 42,000 ahead of a move to 43,600. RSI still below the overbought level at 66, overbought 70, and as you can see, we've had a bounce for the RSI here again, multiple bounces above neutral 50, which tends to happen when you're in a strong bull trend. Moving on to Bitcoin, which has been the weak link in terms of the major markets and continues to not disappoint in that sense, if that makes any sense. Here we've got another failure, 3-day failure at the 200-day line, 63,400. We need an end-of-day close really above that to give us a chance of breaking higher. We've been consolidating now for over 6 months, which is getting rather tiresome, in a range now between basically 60,000 and the 50-day line, and 63,000 and the 200-day moving average. So maybe the next time that range breaks, that might be the level that this market follows. RSI above neutral 50 at 52, which is a plus, and that does suggest that we have maybe a chance early this week to try and break to the upside. Moving on to gold, and here the picture sort of what we expected, bouncing off the 2620 level, which was the initial September resistance. We did that almost exactly, and above that looking for 2700 again, but at the moment, even though we've had a little recovery here, the prospect of breaking into new higher ground above 2700 maybe looks a little bit optimistic, even if we bounced off the channel as I've drawn that line now. So let's see if gold can deliver. RSI bounced off neutral 50, so that is a positive, and if you're an aggressive gold bull, then you'd be looking for that signal as the one to suggest that we're going to go to 2700 and beyond. I think probably that channel a bit steep now, so the slightly less steep line would be towards the 2800 level for the end of next month as a best case scenario target. I've looked at crude oil in recent days just on the basis of the geopolitical situation, and interesting here that we bounced after a bear trap below the 50-day line there at $72. We bounced above neutral 50 on the RSI, so that suggests maybe second time lucky for breaking the 200-day moving average, 77.20, and then heading up to the top of that falling trend channel with the one-year trend channel there at $81 over the next 2 to 3 weeks. But interesting development there while we're above the 50-day line. Moving on to the stocks and starting off with perhaps not the most popular one around, but it's Braveheart. Here it looks as though we may have a bear trap from below 4 pence. I think there was some news this week regarding the company, and above 4 pence on an end of day close basis, or weekly closes we've had. Got the chance of heading up to 5 pence or a little bit higher. There's a gap top there at 5.25. So maybe if you're a fan of the shares, one of the few, then you're looking for that perhaps by the end of this month. But obviously want to stay above 3.5 pence recent resistance. Rather more, an even more obscure situation, Cloud Cocoa here. The chance of a rebound off the lows, slightly higher low there versus September for October. The real trigger, though, would be an end-of-day close above the 50-day moving average at 0.15 to take us up to as high as 0.4 pence by the end of next month. But clearly we failed at the 50-day line 3 or 4 times in the recent past, and that needs to be the trigger, which is broken. On to one of the best setups of the selection today, which is Chariot. Here we've broken recent neckline resistance around 1.6 pence. We've broken above the floor of the gap there at 2 pence, and above that, basically looking for the shares not only to fill the gap up to 3 pence, but actually head up to 6 pence, maybe by the end of the year. So it looks like a very solid turnaround there. It's a bear trap, a double bear trap island reversal, in the sense that we gapped down twice and then have turned around from there. So looking very interesting in terms of that U-shaped turnaround that we've got there with the little bull flag on the side. I suppose it's cup and handle, really, if you want to be pedantic about it. Moving on to Emerson, and here one of the better stocks of the week. Beautiful V-shaped bull flag there, mid-move consolidation. We've got the 50 and 200-day moving averages both rising. That suggests that we're in the run-up to a golden cross. That tends to be the strongest part of the cycle. Minimum here now expected to be basically February resistance around 3.3, 3.4 pence. And basically looking for a bit more. Obviously everyone's waiting for the Moroccans to give the green light on the company's project there. And looking for basically the upper parallel of the red line there, which I'm attempting to draw at the moment. That should be towards the 4 pence level, hopefully by the end of next month. But clearly the technicals there pointing to a decent move over the near term. Only back below the recent resistance from July at 2 pence, base 2.1 pence, delaying the prospect of a big move there to the upside. Moving on to Georgina, where it looks as though the bears hopefully have given up on trashing the company for no reason at all. Here we've got a resistance line there to break at 11 pence. End of day close above that. We're looking for 13.5 pence by the end of this month. It would be nice in the meantime we can get a decent end of day close above the 50-day moving average at 11.75 pence. We've got that uptrend line in the RSI window as well, which is hopefully helping the stock in the background. Only back below 10 pence, really, or 9.75 actually to be precise, really delaying the idea of recovery there. Moving on to Greatland Gold, which since its big Newmont announcement last month has managed to go down by 8%, quite an achievement considering how good that news is supposed to be. Backed off from the 6.5 pence area as well, which is slightly concerning. We've got the 50 and 200-day lines both falling there, so there's possibly a chance of a retest of the 5.5 pence area, the old April support there, before the shares manage to go up. But the minimum on the upside here is an end-of-day close through 6.5 pence as a trigger for the shares to head higher and break the recent downtrend, which would snap the sell into strength price action that we've had. We've also got the RSI below neutral 50 at 43, so that needs to be addressed over the near term. Moving on to a rather unlikely candidate today, which is Jersey. Obviously, sort of think that oil and gas is dead on the London market at the moment, but we've had a very solid end to the week, 2 days with the shares opening at the low, closing at the high, as you can see from the candles, and really expecting a move to the top of the late August triangle there, as high as 81 pence by the end of next month. Yes, with that confident here. Uptrend line in the RSI window as well, as we break out of that falling wedge which has been in place since August. On to Myler, which I looked at the end of the week and getting more excited about it by the minute. Here we've had a beautiful end of day close above the 200-day moving average there at 0.6. looking for the shares to hit the top of that broadening triangle there from November last year, as high as 1.1 pence, maybe by the end of next month, and ideally a bit sooner than that, given the way that we've had a very strong end to the week, with a rising 50-day line there as well. And that gives us the confidence that this is a proper turnaround for the shares after a long time in the wilderness. On to another stock which should be doing rather better than it is. Very positive JV news there for Power Metal, and surprising that the shares have backed off the top of that triangle and the 200-day moving average at 16.3 pence. Looking for an end-of-day close or a weekly close above that to give us 20 pence, and really no excuse for the shares to be lower than they were before the JV announcement. Big picture is that we would head to the top of that triangle, rather that rising trend channel at 27 pence, but maybe that's something for the end of the year or beyond. On to Premier African, which managed to bounce beautifully at the end of the week. We did have a bit of forensic charting there, I think on Friday. End of day close above the top of the gap there at 0.037 was a gap close buy signal, and certainly the shares have made good progress since then. The initial barrier here is the 50-day moving average at 0.053. We haven't been above that properly since back in March, so that would be the first box to tick. Second one would be a move up above that, a move to retest the August resistance and the top of that triangle there towards 0.08. But that's very much in the, or that scenario is very much in the most bullish category at the moment. Ideally, we stay above the top of that gap there, 0.037. Moving on to a stock which I haven't looked at for a bit, which is Quantum Blockchain. Here you can see that we've broken above the 50-day moving average for the first time properly since back in March, I would say, and rising trend channel base here, top of the channel there, 0.082, and we're looking for that while we remain above the top of that latest gap there, 0.57, and the 50-day moving average. So maybe that's a risk-reward situation that some might appreciate. Skin Biotherapeutics, beautiful gap higher at the end of the week through the 50-day line there at 12 pence above that. We're looking for the top of the channel there as high as 15.5 pence by the end of this month. Don't want to see the shares back below 11.25 and the floor of that gap. On to the last three, and running out of time here as well. We've seen Shield Therapeutics bounce off the rising 50-day line twice in the recent past. I'm hoping that this one will be the one that takes it up to a retest of 6 pence, which was the old pre-February resistance, and hopefully much more than that. We also have the old peak there, 2024 resistance at 7.6 pence to attack perhaps by the end of next month. We've had a bounce also, extended bounce off the neutral 50 RSI level as well to back the latest moves. Ideally, we stay on the right side of that 50-day line at 4 pence. On to Vast, where there's been a decent recovery after the rather difficult RNS that the company had to put out last month. We had a gap close buy signal there around the 0.1 pence level. We hit our target there, the top of the triangle at 0.14, and currently we're shooting for the 0.2 pence area to be broken so we can have a move to 0.3, which seems unlikely, but I think even the rally that we've had so far might be regarded as unlikely by some. Ideally, we stay on the right side at 0.14 ahead of any potential further moves there. Finishing off with a rather dark horse, Wishbone Gold, and maybe not one which seems the ideal rebound candidate, but we have managed to close back at October resistance 0.33. If during the week we get an end of day close above that, then we could move to fill the gap up to 0.53 over the next couple of months, especially given that I think we've already had a recent fundraise. That's it for me today. More updates during the week.